We're going to start with futures, though, set for a higher open. The Dow, S&P, NASDAQ all lower in the 3 of the past 4 trading days. As we said, big week for earnings. We'll hear from Facebook, Amazon, Alphabet. We're a week away from the Fed's decision on rates. And then you got the president today tweeting it's far more costly for the Fed to cut deeper if the economy actually does in the future turn down. Very inexpensive, in fact, productive to move now. The Fed raised and tightened far too much and too fast. In other words, they missed it big. Don't miss it again. And, of course, now the Fed blackout window's in place so that we won't get a response to that, Jim, right before the meeting.
Look, the president is he wants that last hike repealed. And I think that we have to one of the things, well, he's obviously a lightning rod beyond belief, but it's perfectly reasonable for him to say that, if only just because it was wrong. I mean, let's look at the substance of what he's saying. Our rates are much higher than everybody else. That's absolutely true. There is a definitive slowdown in the U.S. economy. Absolutely true. Should our rates be this high? No. So Jay Powell should have just said, listen, we're going to cut or cut now. But he would have looked like he was panicking. He had to wait a few months. But look, the president's right, as nutty as he is. I mean, maybe Fox News said he was ready to get that kind of. How about the Amazon Washington Post?
You're raising a really interesting point because Nat Alliance is out today saying, is this the U.S. Fed or the global Fed? Because our retail sales, ex-gas, autos, and building materials growing at 6.1 annualized, right? I mean, but Powell says we got to pay attention to what's happening around the world.
Well, there are two economies. Brian Moynihan, the CEO of Bank of America, said so much on Mad Money. The consumer's very strong, but there's definitely a slowdown in industrial. I mean, there's not even any. You go over Union Pacific. They managed to make the quarter despite the slowdown. CSX could not make the quarter because of the slowdown. The slowdown is pretty definitive everywhere. So in big cap, in industrial.
I'm sure you saw the Goldman note Friday. Manufacturing is not the economy.
It's not the U.S. economy, but that's the world economy does matter to us. Look, if we're just a total service economy, we shouldn't have a Fed. I mean, there are real issues. We do have, if you're Nucor, okay, which is a great American company that can produce new jobs by building new factories, you need rates a little bit lower. You just need it. We don't want to be uncompetitive.
Will 25 be a disappointment?
No. I think that's only
That's a big question today, though.
Right. But look, the media is paying attention. Kind of some of the industrials pay attention, but yeah, we get 25, and then that gets us so we can still talk about another 25. But look, it is hard when you have all the major banks say that the consumer is very strong. But there was construction lending, and it wasn't that good. There was all of corporate lending was not that good. So Powell has something to hang his hat on.
I expected you to say Baltic Dry is surging. Retail sales rebound, the jobs market rebound, the market, obviously. You can build a case that we're actually coming out of a second quarter slump.
Yes, but look, the narrative on every single bank was rates are too high. There was a slow. If the Fed's job is just to get back to where we were in September, they have to cut. I mean, if you take a look at where oil was in September, it was $20 higher, oil being a really good barometer for demand. We need to do this. Britain's in disarray. Brexit's been talked about lately. It's as boring as it is. It actually is starting to concern more than Will Frost. And then you have Europe is bad. I mean, there's a note today about GM. Why is GM good? No, Europe. China is definitely decelerating. We have business. We do some industrial in this country. I mean, there are these big trains and trucks, and they got stuff in it. So, I do think that there is a component of the industrial economy that we need to do better. The Chinese are slowing their investment. How about all those stories? It's like gang up, although it's actually not that much investment in there. Yeah. But, we need an industrial economy to accelerate. We do. We can't just be everybody going to Walmart and buying and Amazon buying. There's got to be more to the economy than Amazon.
Of course, the last voice we got out of the Fed was Rosengren. Sarah brought us that great interview Friday afternoon. Here's what he said.
The economy is actually quite reasonable at this stage. So if that were to change, I'd be happy to ease at that point. But I don't want to ease if the economy is doing perfectly well without that easing.
Yeah. He should have hit the beach. Cape Cod's got fat. Wellfleet's nice.
Wait, so Williams and Clarida can speak, but Rosengren can't?
No. Well, Martha's Vineyard's fantastic. I mean, what is he missing? It's like there's whole areas, Menemsha, great seafood. Honestly, to be serious, I mean, look, we all know that they're data dependent now. They got religion. They went back to Yellen. The data's just not as strong. There wasn't anybody last week. The best quarter that was reported was Honeywell. And Honeywell just acknowledged, listen, if it weren't for aerospace, there's a slowdown everywhere. Honeywell's great, really terrific. Aerospace is bailing everybody out except for obviously Boeing because of the MAX. But there's really a definitive belief among housing executives, among retail executives, bankers, that last quarter point should be retracted. And they got to do that. The president hurts his own case. I mean, can't he just focus on Mueller and fake news? Does he have to intrude?
Yep.
I mean, he's such a broken record.
He's paying attention. I mean,
but he's going to get. He used to love getting a 10 on the, The Apprentice. This is like an 8. He's like not even winning the night with that. You got to win the night, President Trump.